today we'll talk about the 2 setup that make me a full-time income trading. Let's dive right in. So a lot of people ask me about my strategies, and I've done many videos on them in the past. I've explained in details what I trade, what I look for in the market, and as hard as it is to search on YouTube, do a quick search on my channel and find the topic. I'll do another video here again to show you my setups, things I trade, things I look for in the market, and give you my overall view of the market. So my trading is not the kind of trading where you are placing trades like 5 times a day, you're taking a lot of trades every week, and you're always in the market, always in and out. That's not what I focus on. I'm more of a hands-off trader, so I might take only anywhere from 3 to 5 trades a week on these strategies, and I've explained many times in the past that it's not about the number of trades you take that make you a profitable trader. It's all about how you manage these trades and also the edge behind them. You can take just 1 trade a week and have better result than the guy taking like 50 trades a week, and that's totally fine. So we need to be able to detach yourself from the idea of taking more trades to make more money and focusing on just your edge, not trying to compare yourself to other people in the market. This past week, for example, I only had 2 trades set up, and those trades accounted for pretty much a full-time income for that week. Now, if you trade this on a $5,000 account, maybe that's not much money for you, and we want to keep our trading always low risk. But if you start trading this on a bigger size account, $100,000, $200,000 or more, and get to a point where you can even have a bigger account than that, like close to $1 million, $2 million and beyond, eventually, then that's where you are able to make a lot of money from this. I just turned off a lot of people here, so a lot of people are going to be gone from this video. But any case, the point here is start to build your own account over time, build an account that's bigger over time, and then you make more money with even a simple strategy with like 2 trades a week. You will have a pretty good amount of revenue from it. So what does that look like here on the charts? I try to look at what's going on in the market with some zones. So I'm a big fan of support resistance areas that are more horizontal. I don't like the trend lines too much. So what I'm looking for in the market is very simple. I want to see any place where price could be going sideways. And this is what we have here. So we have price going in the trend here before. And then we have price consolidating a little bit. So we have a low here. We make back the same low roughly around here. And we have this resistance here coming back, again over here, and again over here. Now, price here made a big breakout, which was a good place to look for bullish trades, of course. But I'm not looking for these kind of trades. I'm waiting for price to go back within that range and give us some good setup. Okay, so I'm mainly going to do 3 things. I'm going to buy when price is at the bottom, at the support. I'm going to sell when it's at the resistance in that same range. And I would also look for the first pullback, which means whenever price starts a trend, I'll wait for that first pullback, which was here, over here. The first pullback, I'm going to be looking to go with the direction of the breakout. So price broke the range over here and then came back to retest again over here. Okay, it's going to get very messy with these drawings. But then this is the first pullback. I'm going to want to buy here. Same thing in this example here below. Price was outside the range, coming back within the range. And then a few pullbacks and everything of the sort. But then broke here again, the range. And came back for that first pullback here. Pullbacks beyond this, I don't care. That's not my style. That's not what I look for. I don't have any edge in that. But the first pullback is the one where I get a pretty good win rate. And I can look for trades. Oh, the example is over here. Let's see what price did when it got to that point. Now, I'm not going to trade the daily chart because that's for me too high time frame. I prefer a lower time frame because I'm a swing trader, not a very long-term trader that much. So I would try to look at this and then I would go on lower time frames to see what kind of trades we can find there. I think of most of the drawings we have had before, but this is the zone where we had the pullback at. Now I have one clear setup, which is always the same whatever I'm trading, whatever pair I'm looking for. And its setup has been, of course, tweaked and improved over the years. But I look for a break of the Bollinger Band, which is this line over here and then this line over here. This is the Bollinger Band. We have the middle line here between. I'm using a simple 20 and 2 standard deviations, 20 period, 2 standard deviation Bollinger Band, which is very basic. It's what you see in all platforms. But I want to see price breaking that Bollinger Band. So going beyond either the top band or the lower band. The top band will be looking for sell because we're looking for a mean reversion. The lower band will be looking for buy in this case. See how price touches the upper band of the Bollinger Band, breaking it a few times. We have a few wicks here that are actually going beyond the Bollinger Band. And that's a sign that we're going to extreme prices. Now, what does that tell us when we go to extreme prices? It tells us that we might go down to normal prices again. So that price could revert back to the mean, the middle moving average here, or any kind of between the Bollinger Band. So we can look for bearish trades there. But to be able to look for a bearish trade, we need some clear sign, in my opinion, of price action, showing us that the market's going back to bearish and going back lower in that case. And we get this exactly here. So look at the signs of bearish price action here. So we have this one here is a candlestick that is, just going to clear some drawings, if you don't mind. This one here is a candlestick that is bullish. Okay, this one is somewhat of some indecision. This one here is indecision again. This one is bullish. Okay, bullish. And oh, indecision here. Then we get this clear sign again after of a bearish candlestick. Okay, this is a big wick. So meaning that the buyers were able to bring the price all the way to here. Okay, so they went from here to here. And then the sellers took it back down from there all the way to here. Okay, at the close of this candlestick. That is a big move in the market. That is a sign that even if you look at the past candlestick, this one is a lot bigger than what we had before. Okay, it's actually a pretty big range. So what this tells me, because that's my setup I've been able to work on for many years, is we want to go short here. So I will simply look for a buy below the engulfing candle, a few pips below. Now it's going to be like extreme, but it's going to be a little bit less than that. I'll put a simple stop beyond the high. Then I'm going to look for a take profit at either 2 or 3 to 1. You decide you take profit, but I personally myself do 1 to 1. So first half of the trade will be exited at 1 to 1. So I'm just going to try to draw here 1 TP. Okay, my first take profit. My second take profit will be at 3 to 1. So I'm just going to calculate my stop loss and do 1 times that for my first take profit and then 3 times that for my second take profit. Now you have a quick handy tool here in TradingView to do that very easily. We do here a short position. Entry is over here. Stop loss right there. A few pips beyond the candlestick. Now our 1 to 1 will be achieved just the next, actually 2 candlesticks later. So we enter here on this one, this big bearish candlestick. And then 1 to 1 is reached in the second candlestick after that, which is pretty good. Now our 3 to 1, this is a trade that gives us the edge in the market. It's a trade that catches the big moves. Because the first trade is just pretty much getting us to break even. We cash the first trade, the first take profit. Okay, we lock in some profits because we take half the trade off. But the second trade is where we cash a move that will build our account. So here we have the second trade going to 3 to 1. And right over here we achieve 3 to 1 a couple of hours later. Okay, we are on the forward chart. This here was taken on, I believe it was the 11th of November. And all the way to here. To a couple of, actually just before the market closed for the weekend. 28th of November or so. So a couple of days here we have the market. But this is still a pretty good trade. And you're still able to catch some big moves. Like I said, you won't catch many moves every day with this. You're going to catch maybe 3 to 5 trades a week. This week only 2 trades. But it's still there to give you a pretty good edge in the market. And we don't look to trade more trades. I personally look myself to trade the least possible, but to make the best money possible within those trades. Okay, that's my philosophy. Now we had a very similar example here on EuroCAD. I'm going to go through this quickly because it's very simple, the same principle we had before. Although the behind the scenes, the context might be a little bit different. So let's just go through it quickly. This is one of my favorite pair, by the way. Works pretty well for this strategy. So what do we have? Well, we have price here being in the range on a daily chart. You could look at the daily chart or the weekly chart here. It doesn't matter. It's up to you. But you'll see price here touches many times above to the resistance area. And touches many times below here the support area. Same principle. Here we sort of have a false breakout, which was also a good setup. Let's just keep in mind what we want to trade here. Now, like I said before, I'm looking to trading these zones. So either over here, or something below over here. Or I'm also going to look for the first pullback. Okay, first pullback that we had in the market. This is more than the first pullback, but let's just keep it simple. Now, this is a bit more tricky because we are actually going and having our first pullback here. But price does come back here lower. So this is kind of like an intermediary pullback, not the real first pullback, because we come back again lower with our big wick here in the market to do actually our first pullback. So a bit of a tweak here, but this worked also really well. Now, price does the same thing as before, and then we won't trade on this chart because that's too big of a time frame. I would prefer to go on lower time frame to trade this. So let's go on a 1 hour chart or 4 hour chart, which is what I focus on primarily. Actually, 1 hour chart first. Let's go to this to see this for now. 4 hour chart, we did have a trade, which looks very good. We could trade this very well. We had trades many times in the past in this pair too. Let's look at this one first. We could trade this strategy here, the same thing on a 1 hour chart or the 4 hour chart. Get very similar trades with very similar outcome, but different take profits. Let's see how this works. 1 hour chart. So we said this is our area for pullback we're looking at. The line here below is actually the line of our resistance area that's now becoming a support area. Okay, so see how we have the same principle. Price touching the bullish band here, the lower band, because we look for a buy in this case, or the opposite band. And then we have a big wick, which is a candlestick of indecision, and then a big bullish engulfing candle, which shows us that the buyers are stepping in the market in control after a break of the Bollinger Band. So in this case, what I would simply do is, this is our trade here on the forward chart, but the 1 hour chart would look like this. An entry beyond the engulfing candle that broke the Bollinger Band, then it would simply have a stop loss that's here much less wide, a lot more close to the market, because the wick is over here. I'll put my stop loss just beyond the wick to be safe. Now I would do 2 take profit, which is 1 to 1. 1 to 1 was over here. First take profit here reached within a couple of hours. And then our 3 to 1, which is our trade that's going to actually be getting us some profits. It's the one that will actually get us in the market, capture some big moves. Here, 3 to 1. Achieve a couple of days later. So we look at the 4th of November here until the 14th. Almost 2 weeks. Like that's a pretty long trade, but that's still pretty fun. We even got there before. So on the 11th or so. So interesting, right? Same principle here. Now we could trade the same thing. Let's say we were to miss set here on the 1 hour chart. Okay, we're not at the chart at this time. This is 7 p.m. Let's say we forgot to look at the chart that time, but we come down later at our chart, and then we see a trade on the forward chart. Same principle. Let's go see the forward chart right over here. So here we have the same thing. Price breaking the Bollinger Band, going back below the Bollinger Band, then retesting back within the Bollinger Band again with this engulfing candle. Now the trade will be a little bit different. The take profit will be different because we have an entry that's a little bit later. Of course, the forward chart will be giving us a bigger candlestick, so we got to enter later in the move. We didn't enter as early as the 1 hour chart. The 1 hour chart has a win rate a little bit worse, but the forward chart gets us a better win rate because the moves are more significant, therefore probably more reliable in the market. Okay, so 1 to 1 is our first take profit. Again, this is going to take more time here to achieve. Okay, keep in mind this is a forward chart, so it's going to take a lot more time to close the trade either in a loss or in a profit. So 1 to 1 here reached on the 10th of November. So 6 days later. Not too bad. And if you look at our 3 to 1 or second take profit, that will give us actually the good moves and will actually catch the price going forward a lot more. Then we get this happening here on right there. So the 15th. Okay, so a couple of days later. Remember we closed our trade on the, I believe the 12th or the 11th with our strategy on the 1 hour chart. This one here we closed it a little bit later, a couple of days later, but we have the same take profit. Now if you adjust your risk per trade correctly, these should be equal to the same amount. You should have a fixed risk per trade based on this time frame. Let's say 1% risk per trade, and both these trades giving us a 2% reward because we have 1 to 1 and 3 to 1, average of 2% here per trade. Now again, you could tweak these risk parameters to make it your own, make it what you prefer. That's totally fine. You don't have to follow what I follow. You can increase your risk and reduce your risk. That's fine. The goal here of this strategy is really to be able to understand the logic behind it, why we look at zones in the market, why we look at the Bollinger Band for areas of extreme points, and why price should go back within the bands after that to be able to give us a good mean reversion trade. So hope you like this video here today. Hope you got some value out of it. If you have any questions, anything you want to ask, anything you want me to answer, make sure you comment below this video. Put your questions in the comment. I'll be monitoring all the questions, all the comments there, so I'll reply to most of them as I can. And I want to make sure you get some value and you can progress in your trading journey. Now with that being said, I'll catch you back here in the next video pretty soon. Ciao.